Okay, this is the E-mini S&P 500. Going back over the last part of last year and the first part of this year, as you can see back on December the 15th, 16th, we made a beautiful three drive to a bottom pattern. You can see they were almost perfectly equal. They lined up exactly along the downtrending channel, which is what you like to see. The distance between the lows is pretty good. The ratios were either well, they were actually 1.618 of these swings right here. Then you had the big rally, pull back, and then the move up. Then we had a retracement, as you can see, from the low to the high came in at the 786 level. We held that, and then what we've done is we've come up and we've made a perfect 786 retracement of the high that we made back on December 28th. So that should be pretty good because we've completed it in the fashion of A, B, C, D, which is pretty much spot on with what we were hoping to see. We will draw the A, B, C, D line in here so that we can see it. You'll see we'll be really close to where we should be, right within the ballpark of this level. This hit it almost exactly, missed it by one tick. It should have come in at 2063. It came in at 206250. So it was very close, and we had a big move down in the last few hours of the day, last half of the day. So that tells us we're most probably getting ready to head lower. We had a couple other smaller patterns to get us up to that level. Right in here, you'll notice we have another ABCD pattern that formed in through here. We have an a B, C, D. You could also count this as A, B, C, D because this made a high, then came down, and then went back up again. So that could very easily be construed as another A, B, C, D swing forming up at the exact top. So that's what we're watching. Now, as far as the first correction down, we have to go back to where we were right back in here. You'll notice we came down to 203 from 223, actually 225 down to almost 25 points. So we'd be looking for a move of this magnitude, I would think, on the downside here. So we'll just draw this in so we can take a look at it, and you'll see that this will be the expected correction. You'll see anything more than where we are of this tells us we're going to go down a lot lower. So that's what we'll be watching at that point. That will be a 61% retracement you see of the low from January 22nd. So that's pretty much what you're watching. If you were to draw just a simple trend line like this, you can see that that's pretty much what you're doing because all of these are related to 618. You can see each one of these retracements is 618. So if we break that, that tells us we're going down a lot more. So anything below, let's say 2032, would tell us that we are probably going to go down, and we could make a big A, B, C, D to the downside because the overall market looks far more bearish than this one when we look at some of the other things that we're following. So that's what we're watching here in the S&P 500. So live every day in an attitude of gratitude, and may God bless.